Yes, students. Now we will revise the second head of income, that is income from house property. Section 22 to 27 covers the provisions with respect to income from house property. Section 22 being the charging section specifies. Please be careful with this. There is small amendment here. The annual value of the property comprising of building or land appurtenant thereto. The main target here is building. But if building, for a building, if land is also attached, then our target includes land also. Only when land is attached to the building. If it is a vacant land, if I have let out that I am earning rent, then that is not covered here. It is covered under the head income from other sources. Yes, sir. So the main target here is property. So if property, for a property, there underneath that there is a land or maybe parking area or maybe garden area, is that also covered under this head, sir? Yes. They too, of which assessee is the owner. Key thing, if assessee is not the owner, it is not taxable here. For example, I let out my property to you, you are subletting it. For me, whatever rental income I own is taxable under this head. But for you, you are subletting it, you are not the owner. Where is it taxable for you? Income from other sources is chargeable to tax under the head income from house property. So few key things here is the annual value, the building or land appertaining thereto, and assessee should be the owner. If all things come together only, then the income will be taxable under the head income from house property, guys. Exceptions means the following incomes, even though it is from a property, it is not taxable under the head house property. Annual value of the following properties are chargeable under the head profits and gains of business or profession. What are those, sir? Property occupied by the assessee for the purpose of his own business or profession. Sir, I own a property, I am carrying on my own business in my own building. Then that property is not covered under the head house property. Where is it covered? Under the head PGBP. Next, this is an amendment part. Commercial properties of an assessee engaged in the business of letting out of properties means I am not using it for my business. My business itself is letting out of commercial property. That means, am I using it for my business? No, no, no. My business is to let out. To whom? For someone else to do business there. For someone else to do the business. So who is doing business? Not me. My tenant is doing business there. Yes, sir. Next, sir, what if it is a residential houses? I have made a small chart here. Observe. Assessee engaged in the business of letting out of, if it is a commercial property, rental income is taxable under the head PGBP. Sir, what if it is a residential houses covered under IFHP? That is income from house property. Amendment, amendment, amendment. Please take care. Okay. Next, notes. This head deals with both self-occupied as well as let-out property. Or we also have one more category called deemed to be let-out property. Deemed to be let-out property is treated at par with let-out property, guys. As if for residential or commercial purpose. Now, listen here. Sir, I had one building. In the building, in the ground floor, we have one shop, small shop, sir. That shop I have let out. The rental income from letting out of the shop, where is it taxable? Guys, it is a commercial place. I agree with it. But the thing is letting out the commercial place is my business? No, sir. I am doing something else, sir. In my house, a 3 floors building, ground floor, I had kept one shop that I am letting it out for commercial purpose. So my tenant is running some shop there. But letting out that space is not my business. It is not in the nature of business for me. In that case, where is it taxable? IFHP only. IFHP only. Sir, I have lot of buildings, sir. I am registered as my business. What is my nature of business? Letting out of commercial property. Where is rental income taxable now for me? PGB. Please be careful. Small thin gap is there. Okay. If an assessee is engaged in the business of letting out of residential house, then the income generated from letting out of residential house or a part of the house by the owner shall be chargeable under the head income from house property. Then this head is one of the special head where even notional income provisions are covered. Even notional income provisions are covered. Means, sir, even though there is no income, still I might be liable to pay tax, especially in case of deemed to be let out property. Or even in case of let out property, sir, my actual rent might be less. Whereas municipal value fair rent is more, sir. So expected rent is more than actual rent. Will I end up paying tax on the higher amount? Yes. Computation of income under section 23, 24, 25. So the computation part is covered under section 23, 24, 25. Yes, sir. Guys, for income tax purpose, there are three category of house properties. That is let out property. Second is self-occupied property. The last one is deemed to be let out property. Deemed to be let out property. Yes, sir. First, for a let out property, an assessee can have any amount of income or loss. Sir, can he have 10 lakh loss, 20 lakh loss, 30 lakh loss? Yes, he can have any amount of loss because for interest there is no restriction here. Whereas coming to self-occupied property, an individual or HUF can have maximum two self-occupied property. Maximum two self-occupied property. Even if they are using more than two house properties for their self, maximum two will be treated as self and remaining is treated as deemed to be let out property, guys. Okay. So for self-occupied property, we can never have income. The income will be either nil or we can have a loss, but maximum loss will be restricted to either 30,000 or 2 lakh, depending upon how much interest they can claim. Then for deemed to be let out property also, any amount of income or loss we can have. It is at par with let out property, guys. Now coming to let out property. How do we calculate the income from let out property is covered in section 23, subsection 1. The property is let out, which is let out for the rent is known as let out property. The property which is let out for a rent is known as let out property. Computation of taxable income from house property for let out as well as deemed to be let out, same format. For let out as well as deemed to be let out, same format, guys. We have to start with gross annual value. How do we derive gross annual value? We will learn later. That is a starting point for us to compute the income under the head house property. And you have to stick to this format. No interchange of position. Okay, sir. They are not starting with the value called rent. They are starting the value with what? Gross annual value. Then we will reduce local taxes paid by the owner during the previous year. Local tax, property tax paid by the owner during the previous year. Which is our previous year, guys? 24, 25. Net annual value we will get. From net annual value, two deductions are allowed under section 24. 30% of NAV standard deduction means whatever NAV I would have got on that 30%. On that 30%. Yes, sir. Then interest on housing loan payable means if I have taken any housing loan or loan for the purpose of construction, purchase, renovation, repairs of my house property, whatever interest I pay on that is allowed as deduction here. After reducing both, whatever I get is called taxable income from house property. If it is positive, income. Sir, what if it is negative? Can we have negative? Yes. If the interest amount is huge, then I can have loss also. Sir, can we have loss from house property? Yes. But can we have loss under the head salary? Can we have loss under the head salary? Never. Under the first head, there is no possibility of having loss. Don't close full. Just keep it that much. So I can never have a loss under the head salary, but I can have loss under the head house property. What is the treatment of loss? We will learn it later. At the end of this head, I will cover it. Yes, sir. So finally, we will derive the income from house property, guys. This is what will form part of total income calculation. This is what will form part of total income calculation. Fine, sir. Format is easy, understood. But what is this fancy word you used, sir? Gross annual value. Guys, how to determine this? They have given it in the section 23 itself. In section 23 itself, we will see this section 23 to compute gross annual value. I have divided into two parts. When there is no vacancy, when there is vacancy. When there is no vacancy means what, sir? When the property is let out for the entire 12 months during the previous year. My tenant is staying in my property for full 12 months. Maybe there might be a change of tenant. As soon as the old tenant vacated, immediately I have found a new tenant from tomorrow only. Some owners do that. Na? When the old tenant is already under the notice period, they will call all the new people. Come, visit the place. And they would have already booked. 30th is the vacating day. From first, the new person will come and occupy. In that case, the property is occupied for the entire year. Yes, sir. In that scenario, how do we calculate the gross annual value? First step, we will compare municipal value with fair rent. We will compare municipal value with fair rent. See, municipal value is the value which is fixed by the municipal authorities for the payment of stamp duty. for the payment of stamp duty. We also call it as government value. Take it. Compare that with fair rent. Fair rent means, sir, if my property is let out for someone else, what is the rent we will get? Or similar property is next, my neighbor is also having same property, same square feet. If that is let out, how much we will get? Clear? Yes, sir. Compare both of that, take whichever is higher. First step done. Second step, compare this whichever is higher with standard rent. Sir, what is this standard rent, sir? Guys, there is a separate Rent Control Act. As per that, they have prescribed what is the maximum rent which has to be charged by the owner to the tenants based on the area, square feet, everything. So we have to compare that. That is the maximum rent which the owner can charge. Clear? So we will compare this to whichever is higher in standard rent and take whichever is lower, because standard rent is maximum what you can charge. They didn't tell you charge this much in the owner can charge less than that, but they cannot charge more than that. So that is by whichever is lower we are taking. We call this as expected rent. Whatever, whichever is lower we get, we also call this as expected rent. Compare that with actual rent. Take whichever is higher as gross annual value. Now, sir, how do we compute actual rent? Whatever rent the owner is earning. But assume tenant is staying in the house but didn't pay the rent for 1 or 2 months. Chances are there. Unrealized rent, we call it as. Unrealized rent. That is, tenant is staying in the property but is not paying the rent. So property is occupied for full 12 months, but tenant is not paying rent for 1 or 2 months. There are 4 conditions given under Rule 4, guys. There are 4 conditions given under Rule 4. If all Rule 4 conditions are satisfied, yes, the owner can reduce unrealized rent while calculating actual rent. So you will take annual rent. Sir, how do we calculate annual rent? Monthly rent into 12 minus unrealized rent. Minus unrealized rent I can do only if I have satisfied all Rule 4 conditions. If not, I cannot reduce it. Sir, what are those Rule 4 conditions? Sir, the tenancy should be bona fide, genuine. Even though I knew the tenant will not pay, I should have not let out the property. I have let out the property to a tenant with good interest, thinking that he will pay me. Later, I got to know he is big rowdy and okay. Or else, one thing. Second, I should have taken all the necessary measures to collect rent from him. Or else, I have to prove that whatever I do, he will not pay. Whatever I do, he will not pay. Sir, he is already barbad. I cannot do anything. Maybe if I have to take him to the court and all, if I put a case and all, it is a waste of time and energy for me only. In that, if I prove it, then fine. And also, I should have taken the steps for him to vacate my property. And I should make sure that I am not vacating him from this property and giving my own property in some other area. No, you cannot do that. You already know that guy is a bad date. Again, you cannot take a chance with another property. If all these Rule 4 conditions are satisfied, yes, unrealized rent can be reduced while computing the actual rent. Yes, sir. Next, when there is a vacancy, guys, vacancy is different, unrealized rent is different. I told you what is unrealized rent. Tenant is staying in a property but not paying a rent. Whereas loss due to vacancy means when there is a vacancy, there will be a loss to the owner. Why, sir? I couldn't find a new tenant. Now, you were staying in my property for 8 months during previous year. You vacated the property for some reason, you wanted to shift elsewhere. I couldn't find a tenant for 2 months. Third month, I found out. So 2 months I have suffered loss due to vacancy. Yes. So is unrealized rent and loss due to vacancy same? No. Loss due to vacancy means, sir, that is the loss suffered by the owner due to vacancy of the property. Due to vacancy of the property. Yes, sir. Now let us see. If there is vacancy, how do we compute gross annual value? Guys, till second step, everything remains same. Till expected rent, everything remains same. Okay, sir. And here, what do we do is, we will compare expected rent with comparison. Expected rent with actual rent plus loss due to vacancy. Sir, what is actual rent here? Actual rent here means annual rent minus loss due to vacancy minus unrealized rent, if any. If it is there, if at all, if both are there, you have to reduce it. Annual rent means what, guys? Monthly rent into 12 months. What is loss due to vacancy? Sir, tenant, I couldn't find a tenant for 1 or 2 months. Loss. Then unrealized rent means what? Tenant was there. You were there for in my property for 8 months. Nah? You didn't pay last month rent. You didn't pay last month rent. What is 1 month rent there? Loss due to vacancy. I could, sorry, unrealized rent. And 2 months I couldn't find a new tenant. Nah? What is that for me? Loss due to vacancy. Yes, sir. So, actual rent I will take, and please listen here. While calculating actual rent, you would have already reduced loss due to vacancy. You would have already reduced loss due to vacancy. Now what should you do? Add it back. Only for comparison purpose. Only for comparison purpose. Add it back. Okay, sir. So compare expected rent with actual rent plus loss due to vacancy. Now, if actual rent plus loss due to vacancy is more, actual rent will be GAV. Not actual rent plus loss due to vacancy. Actual rent will be GAV, guys. Okay. Then, sir, what if expected rent is more than actual rent plus loss due to vacancy? Then expected rent will be GAV. Now you may have a doubt, sir. Expected rent you would have simply straight away compared with actual rent like how we did here, no, sir. Why the drama plus adding? Because you reduced your loss due to vacancy. Again, you are adding it here. Simple, guys. Expected rent will be for a year, whereas actual rent will be for less than a year. Why? Because there is a loss due to vacancy. In order to try to keep a common pace, what we are doing is we are trying to add loss due to vacancy on the other side and compare it. But are they taxing it? No, no, no. If this side is more, what is considered as gross annual value? Only actual. Because loss they cannot tax fee. Is that clear? So only for comparison, we are taking actual rent plus loss due to vacancy. So if you want, I will just show some illustration on this. Just a minute. Yeah, this is when there is vacancy, guys. Observe, when there is vacancy, monthly rent is 20,000 per month. Expected rent is 192. Vacancy is for 3 months. So what is the loss due to vacancy? 3 into 20, 60,000. Agree na? Tuck, 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 you should get. Sir, expected rent they only given. If not given, you know how to calculate it. How do you calculate expected rent? Come on. Municipal value versus fair rent, whichever is higher. That figure with compare with standard rent, whichever is lower. Good. That is called expected rent. Good. Okay, sir. So we have got expected rent already given straight away in the question. Then actual rent is only for 9 months, guys. So 20,000 into 9. Correct? You can take 20,000 into 12 minus 3 months loss due to vacancy. But I have straight away taken it here. Okay, sir. Then what is the loss due to vacancy? 60,000. Add up both. How much is that? 240. Is 240 more than 192? Yes. What is the GAV? Not 240. What is the GAV? 180. 180. Hope you guys got it. Next. Monthly rent is 13,000 per month. Expected rent is 195. Vacancy for 2 months. So actual rent is only for 10 months. So 1,30,000. Then last due to vacancy is for 2 months. 26,000. So 156 is less than 195. Expected rent is more. What is the GAV? Expected rent. What is the GAV? Expected rent. Next. Monthly rent is 25,000 per month. Expected rent is 3 lakh. Vacancy is 3 months. So last due to vacancy is 75,000. Okay, sir. If I add up both actual rent and loss due to vacancy, how much do I get? 3 lakh. Sir, when expected rent and actual rent plus loss due to vacancy is equal, what do I do? We will take actual rent. We will take actual rent as the gross annual value. Clear? So please be careful. Why we are adding loss due to vacancy here is only for comparison purpose. Will it get taxed for me? No. Okay. Sure. Next, we'll move forward. This unrealized rent and all I have told you, you can reduce it only if rule 4 conditions are satisfied. Next, local taxes or municipal or property tax, everything is one and the same, guys. This is allowed as deduction only if it is paid by the owner during the previous year. Sir, paid by tenant, not allowed. Not paid during the year, not allowed. Sir, paid in the next year for current year plus next year. Both the years put together, I have paid next year. Can I claim both? Yes, on payment basis. So municipal tax or local tax or property tax is allowed on payment basis. Is there any dedicated section for it? No, there is no section for it. Okay, then coming to section 24 deductions. Only 2 deductions are there. Like how we had under salary, section 17, correct? 3 deductions were there, and this is under house property. This can be claimed only by the assessee who has income under the head house property. Sir, I don't have any income under the head house property. Can I come and claim it? No, this is given only against the house property income. Okay, sir. Like how we had 50,000 and 75,000 standard deduction for salary. Now, likewise, here also we have standard deduction, but not in terms of amount. It is in terms of percentage. in terms of percentage. Yes, sir. What is it? Standard deduction under section 24A. 30% of net annual value is allowed as standard or flat deduction, irrespective of the actual expenditure incurred. No separate deduction for repairs, insurance, etc. is allowed. However, this deduction is not available on self-occupied property. Because for self-occupied property, only one thing I will focus, that is interest. Nothing else. Nothing else, guys. Okay. Now, sir, why is this deduction given? See, it is not possible for the departments also to track how much expenditure is incurred for repairs, painting, depreciation and all. So instead of allowing it individually case to case basis, they told take it as standard deduction. Everyone claim 30%. So guys, listen here. Under house property, there is deduction only for three items. One is municipal tax paid. Second one is standard deduction. Third one is interest. So now two specific deductions are there. What are those? Municipal tax paid, interest. Rest all is covered in the middle one. In the middle one. That is, sir, repairs. Because sometimes they will confuse you by giving lot of items. Everything falls under standard deduction. Irrespective of the actual expenditure, everything is covered in standard 30%. Clear? Because sometimes in the question they will give you repairs expenditure, painting expenditure, insurance, or depreciation, or that to this, so many things they will give, but don't consider it. Don't consider it. Okay, sir. Interest on borrowed capital, section 24B. Guys, if any housing, okay, let us tell, not housing loan straight away. If any loan is taken for the purpose of acquisition, construction, renovation, repairs, reconstruction, whatever interest is paid on it is allowed as deduction. Only interest is allowed. Sir, what about principal repayment? ATC provides for it. ATC deduction, not under salary, not under house property head. It is deduction chapter. Clear? There also conditions are there. We will take care of it later. Okay, sir. Hope you understood. Only deduction here is given for interest. Interest on what? Loan. Loan taken for what purpose? PC triple R. PC triple R. Purchase, purchase acquisition one and the same. Purchase, construction, repairs, renovation, reconstruction. Triple R movie you have seen? Yes. Repairs, renovation, reconstruction. PC. Okay, sir. Then it can be claimed on accrual basis. Guys, municipal tax on payment basis, interest is on accrual basis. Sir, for previous year 24-25, my interest on loan is 2 lakhs, sir. Or else let me take 5 lakhs, sir. Let out property. I have not yet paid, sir. I don't have money. Can I claim it as deduction? Yes. Sir, next year I paid 5 plus 5 lakhs, sir. Current year's 5, next year's 5. How much I can claim next year? 5 lakh on accrual basis. On accrual basis, guys. Okay, so next, interest relating to the year of completion of construction can be fully claimed in that year, irrespective of the date of completion. Now, the year in which, if the loan is taken for the purpose of construction, the year in which construction is completed, irrespective of the date of completion, you will claim full interest in that year only. Sir, what about the loan, which is interest on loan relating to the year prior to the completion of constructions? It will be allowed in 5 equal installments from the year in which construction is completed. Let me simplify it. Let me simplify. Listen, guys. See, please listen. Date of loan. Date of loan. Observe the dates, everything. Date of loan. Assume is 1st July 2020. Date of completion of construction. I have completed the construction on 1st November 23. Okay, sir. First lock pre-construction period. First lock pre-construction period. So pre-construction period will start from date of loan. Till when, guys? 31st March standard date. Locked. 31st March of which year? Immediately preceding this. Date of completion of construction is 1st November 23. Na? Immediately before that, what was the 31st March? 31st March 23. 31st March 23. Whatever interest is there for this period will be allowed in 5 equal installment. From which year? From the year in which construction is completed. In which year the construction got completed, sir? 23-24. So for 23-24, whatever is the interest from 1st April to 31st March, can we claim fully, sir? Can we claim fully? Yes. In which year? Same year. Sir, construction was completed only in November. No problem. Even if it is 30th March, you can claim fully for that year. Fully for that year because property is ready now, ready to occupy. So take it. Take full interest for that. Sir, what about the interest relating to past, sir? We will claim it in 5 equal installment. Why didn't you claim then only, sir? Because there was no property. When there is no property, there is no income from house property. When there is no income from house property, how will you claim interest? Interest will claim, you will claim against what? Okay. So 23-24, from 23-24, listen here. You will claim current year interest plus 1/5 of pre-construction period interest. Is this forever? No, only for the first 5 years. Only for the first 5 years. For example, assume pre-construction period interest is 10 lakh, guys. You will claim 2 lakh every year. Plus that year interest. Plus that year interest. Hope you guys got it. Clear. And post-construction period will always start from 1st April. Immediately. That is after this date. 1st April 23. For post-construction period, you can claim that year interest, that year itself. Sir, this year I couldn't claim, sir. Can I carry forward? No. Interest you cannot carry forward. It is only on accrual basis. Only for pre-construction, they are giving deduction in 5 equal installment from the year in which you complete the construction. I can see girls talking there. Next, interest on housing loan. One simple table I have made, guys. Please look here. Sir, how much can I claim interest deduction? If it is a let out property or deemed to be let out property, you can claim whatever is the amount of interest. No limit in the sense you cannot claim dummy interest and all. Whatever is your actual interest, 2 lakh, 5 lakh, 10 lakh, 15 lakh, 20 lakh, whatever. On what basis? What basis? Accrual basis. Come on, guys, you should be knowing because municipal tax is on payment basis, interest is on accrual basis. Unnecessary stories they will build because he's accrued to means he's supposed to pay 10 lakh interest in the current year, but he has paid only 8 lakh. How much deduction will you allow? 10 lakh. For self-occupied property, important point. For self-occupied property, maximum interest is either 30,000 or 2 lakh per person per annum. But 2 lakh is not free. It is attached with conditions. It is attached with condition. Only if the following conditions are satisfied, you can claim 2 lakh interest on your self-occupied property. If not, how much you can claim? Only 30,000. If the following conditions are satisfied, the maximum amount of deduction shall be 2 lakh. For which property? Self-occupied. Self-occupied means what, guys? It is occupied by assessee and his family members. Or it might be unoccupied property also. Okay, sir, unoccupied means I have one house, another one house we have kept just as a spare. That also will it come under self-occupied only? Yes. Sir, you talked about some loss due to vacancy. See, loss due to vacancy will come only over and above second properties. Clear? Assume, sir, I have 3 property. All 3 properties fully vacant. Fully vacant. Full year. 2, you can treat it as self-occupied. Unoccupied at par with self-occupied. Another will become what? Let out property. That is deemed to be let out property. Clear? Is it taxable or not? We have seen how to calculate gross annual value and all. Clear? Yes, sir. So, maximum 2 properties you can keep either as self-occupied or unoccupied. Even if it is more than that, maximum only 2. Remaining will be treated either as let out property if you have let out. Even for 1 month if you have let out during the previous year, it becomes a let out property. No, sir, more than 2 I have. Everything I have kept vacant. Deemed to be let out. Deemed to be let out. Oh. Property is acquired or constructed from a loan borrowed on or after 1st April 1999. Loan date is on or after 1st April 1999. And loan is taken for what purpose, guys? Acquisition or construction. Only PC. What if it is triple R? 30,000. What if it is triple R? 30,000. If the loan is taken for repairs, renovation, reconstruction, even if it is taken on or after 1st April 1999, still maximum interest allowed for self-occupied property is 30,000. Okay, one more condition. Such acquisition or construction is completed within 5 years from the end of financial year in which loan was borrowed. All conditions has to be satisfied. You can observe and is there. Everything has to be satisfied. Even if one condition is violated, you can claim only 30,000. You can claim only 30,000. And one more condition is there which is implied always satisfied. That is you have to submit a interest statement from the bank. proof that yes, you have paid it. Yes, you have paid it. Guys, listen here. What are the conditions are? Date of loan. Date of loan should be on or after 1st April 1999. Plus, loan should be taken for acquisition or construction. Plus, in construction should be completed within 5 years. Construction should be completed within 5 years. 5 years from when? Important. Assume guys, date of loan is, date of loan, observe, 11 December 2020. 11th December 2020. Don't take that date, which is the end of that financial year. 31st March 21. Correct? Huh? We have 5 years time from here. 5 years time from there. So you should have completed your construction within 31st March 26. Only then you can claim 2 lakh. If not, only 30,000. Only 30,000. See, loan can be taken both for construction as well as acquisition. But if it is acquisition, definitely it will be completed within 5 years. So they are more bothered about what? Construction. Construction should be completed within 5 years, guys. Okay. Self-occupied property means, guys, self-occupied property is covered under section 23 subsection 2. How many properties you can have maximum as self-occupied? Subsection 2. 23 subsection 2. Yes, sir. Self-occupied property or unoccupied property, section 23 subsection 2. Straight away take NAV. Sir, can I start with GAV? Yes, you can start. If you start with GAV, it will be nil. No deduction for municipal tax paid. So NAV will be nil. Straight away start with NAV. Okay, or you can just give a note telling GAV for a self-occupied property will be nil. Okay, sir. 30% when NAV itself is nil, 30% of nil is nil. Correct? Yes, sir. So only one thing you will focus is interest on housing loan. How much maximum? I already discussed 2 lakh or 30,000, guys. Okay, sir. So if at all if interest is there, listen. If at all if interest is there, then it becomes loss from self-occupied property. If not, income from self-occupied property will always be nil if you don't have any loan. Sir, I have constructed the building out of my own money, sir, or I have arranged somewhere where I am not paying any interest. In that case, you don't have any interest, so income from self-occupied property will be nil. Okay, sir. The interest on loan borrowed shall not exceed 30,000 or 2 lakh. If the loan is borrowed for the purpose of repairs, renovation, reconstruction, that is triple R, then the maximum deduction for self-occupied property on interest is how much? 30,000. Then, guys, 30,000 or 2 lakh is per person. Per person. Please be careful. Sir, I have 2 self-occupied property. Can I claim 2 plus 2? 4 lakh? No, only 2 lakh. Only 2 lakh. Now listen. I co-own my property with my wife. We both are co-owners. How much we can claim? 2 plus 2. Per person they told. So 2 plus 2. Both of us can claim? Yes. We will talk about co-ownership later. Okay. So yeah, this is the thing. And the guys 2 lakh or 30,000 will include pre-construction also. For example, I gave an example here. So assume current year interest is 5 lakh and pre-construction paid interest share. Totally it was 10 lakh. 1/5 of that is coming to 2 lakh. So totally 7 lakh. But this is on self-occupied property. How much I can claim maximum? 2 lakh. So 2 lakh is including pre-construction period interest. Add current year interest. Add 1/5 of pre-construction period interest for the first 5 years. Add up both. Take aggregate. Restrict it to maximum 2 lakh. On self-occupied property only. On self-occupied property only. Okay. Next, property partly let out and partly self-occupied. If a single unit, guys, if a single unit of a property is self-occupied for few months and let out for few months during the previous year, it will be treated as let out property for the entire year. In that case, what we are supposed to do? Take municipal value fair rent standard rate for the entire year. Compare that with the actual rent for let out period. Whichever is higher, you will take. Actually, your assess is getting it. Why? Sir, actual rent will be only for let out period. Assume let out period is only 8 months. Remaining 4 months, I used it for my own purpose. So you told municipal value fair rent standard rent we have to take for the entire year and compare with actual rent. Maybe expected rent will be more. Yes. I will start with GAV, which is higher. They told, okay, we are penalizing you in one place while calculating GAV by considering higher value. We will give you benefit in other place. What is it? Municipal tax paid for entire year can be claimed as deduction. Interest, no restriction. 30% of NAV is allowed as deduction, as if it is a let out property. Okay, one way they are penalizing you, another way they are giving you a reward. Hope you understood what I tried to communicate. Yes. Next, deemed to be let out property. Maximum how much of properties you can have as self-occupied? 2. 23 subsection 2. Deemed to be let out property. Anything over and above 2 is considered to be deemed to be let out. See, if it is actually let out property. No, sir, we have 5 properties. In all 5 properties, I and my family members are enjoying, sir. In that case, only 2 is self-occupied. Remaining 3 is deemed to be let out property. And for deemed to be let out property, listen, expected rent will straight away become gross annual value. No question of actual rent. No question of actual rent because I have not let out. Okay, sir. Expected rent will become GAV and all other deductions can be claimed as if the property is let out. Municipal tax paid by the owner allowed. 30% of NAV allowed. Interest allowed without any restriction. Interest allowed without any restriction. And this maximum 2 properties as self-occupied is available only for individual HF. Available only for individual HF. For other category of assessee, any property will straight away become deemed to be let out property. Listen. Company has purchased some house properties for their employees to stay. Okay, like staff quarters and all. During entire year, it was self-occupied, means by their own employees. Clear? They are not letting out to anyone for a rent and all. Can they treat it as self-occupied? No. For a company and all, there is no question of self-occupation. Self-occupation will come only for individual and HF. Whereas for any others, even though it is self-occupied by the same people or their employees, it is considered to be deemed to be let out property. It is considered to be deemed to be let out property, guys. Yes. Easy to remember. Deemed. Start with D. D is which alphabet? Fourth alphabet. Subsection 4. Property let out partially means, sir, I have one building. In that building, there are 3 floors or 3 houses. Each houses we will treat it separate. Or each floor we will treat it separate. If it is a duplex house, one house only. Clear? Now, sir, assume one floor only, let us take. In one floor, I have one house, another house. One is self-occupied, another is let out. We have to do 2 separate calculation. We have to do 2 separate calculation. But please be careful here. GAV calculation should be careful because municipal value, fair rent, standard rent and all normally would be given for entire property. For self-occupied property, ignore it. Whereas for let out property, take only the proportion of let out. For calculating what? GAV. While calculating GAV, municipal value, fair rent, standard rent normally will be given not only for let out portion, it will be given for entire property. If it is straight away given for let out portion, do comparison and take it. Okay, step 1, 2, 3, apply and do it. Normally, what I have observed is when there are 2 units which is in the same property which is let out, one is let out, one is self-occupied. They will give municipal value, fair rent, standard rent, or even interest paid and all for entire property. So we are concerned more about let out portion. So take only the proportion which is attributable to let out property. Clear? Whereas for self-occupied, we can claim only interest part. Only interest part, guys. Next, inadmissible deduction. Sir, I have taken loan from some foreign lender or foreign bank. Whatever interest I am paying outside India, can I claim it as a deduction under section 24B? Yes, you can claim, provided you have deducted TDS on it. As money is going outside India, I have to target that guy. Government cannot catch hold of that guy. So they're telling, hey, as a payer, you deduct TDS and claim interest. If you don't deduct TDS and remit it to the government, I will not allow interest as expenditure to you. Similar provisions are also there under the head PGBP under section 40A, 40A1 and 40A1A. That is TDS provisions. We will see that in PGBP. Next, arrears of rent and unrealized rent received subsequently. Now you were staying in my property in 2018-19. You didn't pay me the rent for 2 months. You ran away. Okay, normally unrealized rent cannot happen. Why? Because the owners are very smart. They would have taken security deposit. Okay, if you don't pay, they will cut and give their balance only to you. But still, in the law, they have considered it, and even for academic purpose, they may give unrealized rent. Accordingly, treat it. Okay. Now you didn't pay me 2 months rent and you ran away. Okay, so while calculating gross annual value actual rent in the year in which you ran away, I reduced unrealized rent because I satisfied all rule for 4 conditions. Now in the year 24-25, you realized your mistake, came back to me telling, sir, what I did that year was wrong, sir. I realized it. I went to Himalaya. There God came to me and told what you did to Vikas sir was not right. So I came back in search of you. Take it, sir. You came back and gave me unrealized rent, what I had suffered loss. Bad debt recovered. Accounts ಕೇಳಿರ್ತೀರಲ್ವಾ, bad debt recovered. So now I recovered the unrealized rent. Is it taxable for me? Yes. In which year? 24-25. Under which head? House property. Now how much, sir? Straight away 30% standard deduction they are giving. So means only 70% is taxable. Because when calculating regular income from house property, we have standard deduction 30%. Na? So here, this is not regular income for me. What I had suffered loss, you are coming and giving it back to me. So they're telling claim 30%, remaining 70% would be taxable, guys. Only remaining 70% would be taxable. Okay, so this is covered in section 25A1. 25A1 will tell if it is recovered, taxable. 25A2 will tell 30% standard deduction. Same way arrears of rent. Okay, unrealized rent. Now assume, guys, I am not at all the owner in 24-25. When you came and paid me the rent of last 2 months of which year I told 18-19. So you came when you came and paid me 24-25. I am not the owner of the property. I already sold it. Like you, only many people did to me. So I was fed up of this property and I sold this property. In 24-25, I am no more the owner. Is it still taxable for me? Yes, because this is a loss which I had already claimed under the house property. Even though I am not the owner in 24-25, still unrealized rent recovered is taxable under the head house property. Same way, forget about unrealized rent now. Next, arrears of rent. Arrears of rent means, guys, you were staying in my property for a very long period, so I was charging 20,000 rent per month. I was supposed to increase it last year only. You told, sir, this year don't want, sir, please, sir, Anta. Okay. In the current year, I am increasing for 22,000, but retrospectively. That is from last year beginning. So for last year, you have already paid me 20,000. So to compute the income from house property in the last year, I have considered actual rent how much? 20,000. And this 2,000 we didn't have an idea. So you have also not considered. I have also not considered in the last year. In the current year, to calculate actual rent, we have to take 22,000 into 12. Yes, sir. What about 2,000 extra I will receive for last 12 months? 2,000 into 12, 24,000 I will receive. Is it taxable as regular income from house property? No, no, no. It will be taxable under the head house property as what? Arrears of rent. Arrears of rent. So 24,000 minus 30%. Remaining 70% would be tax. Clear? Arrears of rent is nothing but, sir, if by chance if there is an increment in rent retrospectively, which we would have not considered in the past, but if owner is getting the benefit of it, it is taxable in the year in which it is received under the head house property. Both of this might not be a regular income. First calculate what is your regular income from house property. For that you can add this, but please be careful, add only 70%, not 100%. Okay, co-ownership. Sir, I and my brother or I and my wife together own a property, sir. How do we compute the income from that property? First check whether it is self-occupied or let-out property. If it is let-out property, very easy. Compute the income from house property. End figure, whatever is there, split it between the co-owners. In what share? Co-ownership share. Whatever is the share of ownership, divide it in that ratio. Yes. Okay, sir. Coming to self-occupied property. Self-occupied property. Each co-owner can claim 2 lakh or 30,000. Assume 5 co-owners are there. Each co-owner can claim interest how much? 2 lakh or 30,000, depending upon the conditions. Yes. Guys, listen now. Interesting. I have one property which is co-owned with my wife. We have taken loan on it, self-occupied. I have one more house which is completely owned by me. Completely owned by me. Now for the co-owned property, how much maximum interest I can claim? 2 lakh. I am asking about how much I can claim? 2 lakh. My wife also can claim 2 lakh. Okay. For co-owned property, 2 lakh. Plus one more property I exclusively own. For that, how much I can claim? 2 lakh. 2 plus 2. Can I claim 4? No, restricted to 2. Restricted to 2. House wise 2. At the end, assessee wise 2. Understood? Yes. Deemed ownership. Sir, section 22 clearly told assessee should be the owner. Correct? Yes. Owner means what? Legal owner. But they have given few exceptions for it under section 27. Means in the following cases, even though assessee is not the legal owner, we are considering him as deemed owner. Means when you are considered as deemed owner, for your section 22 applicable, yes. Should we compute income from house property for you? Yes. Are you liable to pay tax on that? Yes. As per section 27, the following persons, though not the legal owners of the property, are deemed to be the owners for the purpose of section 22 to 26. What are those? Transfer to a spouse or a minor child other than minor married daughter as a gift or for inadequate consideration. If house property is transferred to a spouse or minor child other than minor married daughter, sir, how can you marry a minor married daughter? Say illegal. But if it is, they have given in the law. You don't say even illegal incomes is taxable in under income tax act. Does it mean that our government is entertaining illegal income? No, there are other laws to take care of it, other departments to take care of it. Okay, in income tax, what we are telling is if there is, it is taxable. This is how it is taxable. Okay. If house property is transferred to a spouse or minor child, who is the legal owner? Receiver. But for income tax purpose, who is deemed to be the owner? Transferor. So if at all, if the receiver is earning any income, hey, listen, if receiver is earning any rental income from the property which is transferred, it is taxable for whom? Transferor. Transferor. Please be careful. This has some connection with clubbing. I will explain this when I go to clubbing. Because what is covered here is only house property. If it is any other property, clubbing will get retracted. Under section 64. Okay, sir. So you can just mention red with clubbing. Clubbing means not the clubbing what you are thinking about. Chalo. Even if it is transferred to minor married daughter as free without any consideration also, it is not taxable here. Sir, will clubbing get attracted? Yes, we will see that under clubbing. Yeah. Holder of impartable estate, HUF. Guys, HUF normally holds the property on behalf of all their members. They manage it. So who is actually legal owners? Members. But who is managing it? HUF. Who is considered to be the deemed owner? HUF. Income from house property is taxable in the hands of HUF. Next, member of cooperative society. See, if you cooperative society distribute the house properties to their members to stay there. So who owns the actual property? Cooperative society. But who is living there? Who has the possession? Members. Members are considered to be the deemed owners. Because some members, what they do now, Papa, the cooperative society or the employer sometimes give the house to the employees to stay. But they don't like that quarter. They will let out to someone and they go and stay in some luxury house. This actually happens. Clear? So when members let out the property which is given to them by the cooperative society, and if they earn the income, they are considered as deemed owner. And where is it taxable for them? Under the head house property. Then person in the possession of a property. Guys, assume I have purchased a property from you. I have already taken the possession, but property is not yet registered in my name. So you are too busy. Okay, you are not giving time for me to get registered the property in my name. Okay, or maybe due to some reasons government is delaying it. So still legal ownership is with you only? Yes. But as I have already started having the possession of the property, I am considered as deemed owner. This is as per Transfer of Property Act, section 53A of Transfer of Property Act. Next, person having right in a property for a period not less than 12 years. Not less than 12 years. Means I have taken the property for a lease 15 years. I am not the owner. Lesser is the owner. But still, as I have taken for more than 12 years, they're telling I am considered as deemed owner. I am considered as deemed owner, guys. Okay. Done with house property provisions. Now, only small head, guys, section 22 to 27. Sir, what if I have a loss? We can have a loss under the head house property. See, loss, each headwise I will be covering, and I will also be doing as a separate chapter. We have a separate chapter called set off and carry forward of losses, section 70 to 80. But I will be doing it advice so that it would be easy for you. Then we will go and connect all the dots. Where? In set off and carry forward of losses chapter. Okay. Sir, I have house property loss. Can I set off one house property loss against the other? Yes. Sir, can I set off my house property loss against the other rates of income? Question mark. Question mark. Depends on which scheme you are following and all. Let us see. See guys, when it comes to any loss, there will be two losses: current year loss, brought forward loss, or carry forward loss. Current year loss means in the current year 24-25, I have suffered a loss. If it is a current year loss, always I will have two options. One is to set off within the same head, or I can set it off against other heads also. But here and there, some restrictions are there. Okay. Sir, if I couldn't do both, then what will I do? Carry forward. Third option is what? You will carry forward. Once you carry forward, you can adjust the loss only within the same head. Inter-rate adjustment is not allowed. Inter-rate adjustment is not allowed, guys. Just a minute. Just a minute. I will just show this because if you just have at least some idea, it will be helpful. Just hmm. Listen here. See, there are two category of loss, guys. There are two category of loss: current year loss, carry forward loss. For current year loss, first you can have an option of intra-head, that is within the same head, which has some exceptions. We will see that later. Next, if not possible, second option is what? Inter-head. That is, can you adjust it against other rates? Yes. Even for that, there are certain exceptions. Fine, sir. If both are possible, if both are not possible, one is also not possible, two is also not possible, then what do? You carry forward the loss. But once you carry forward the loss, you have only the option of intra-rate adjustment. You cannot adjust it against other rates. This is the sequence of adjusting the loss. Okay, so just a minute. Yeah, let me go back. Come back to house property. Yes. Yeah. If it is a current year loss, house property loss, adjust it against income from other house property. That is, loss from one house property can be set off against income from other house property within the same head. We call it as intra-head adjustment. Allowed, sir. Next, can I adjust it against other heads of income? Yes, but maximum 2 lakh. Maximum you can adjust is 2 lakh. If you are following default regime, that is not allowed. If you are following default regime, current year house property loss can be adjusted only within the same head. If you are following optional regime, you can adjust it against other rates, but maximum 2 lakh. Sir, what if I have 5 lakh loss? Adjust 2 lakh, remaining 3 lakh carry forward. If you are under optional regime. If you are under optional regime. Okay. Fine, sir. If both are not possible, what will I do, sir? Carry forward it to next 8 years. Next 8 years. But this carry forward also is not allowed under default regime. Under default regime. Important, guys. Yes. Next, sir, you told you can carry forward. I can carry forward and adjust it within same head in next 8 years. Only if I am following optional regime. If I am under default regime, no, I cannot follow. I cannot carry forward. Guys, if I am following default regime, only one option is left to me. What is it? Adjust current year house property loss only within same head. No, sir, I don't have any income within the same head. Govinda. That's all. Okay, say tata bye bye to loss and go to the next year. Next, a few more things. This I will touch first. Impact of section 115 BAC on house property head, guys. That is the default scheme. What I cannot claim. The below list contains the exemptions and deductions not available under the default tax regime, section 115 BAC, related to the head house property. Interest deduction 30,000 or 2 lakh under section 24B for self-occupied property. Sir, you told self-occupied property interest I can claim maximum 30,000 or 2 lakh. Na? If you are under default, blocked. Guys, come on. If you are under a default scheme, always income from self-occupied property will be nil. Will be nil. This figure will always be nil, nil, nil. Because this is not allowed. This will always be nil, guys. This will always be nil. Yes. Okay, sir. Then Set off of current year house property loss against other rates. Can I do it? No, sir. You just now told us we cannot do it. Then can we carry forward? No, we cannot carry forward. Both are not allowed under default regime. So you can see set off of brought forward house property losses against current year house property income. Both are not allowed. Both are not allowed, guys. Yes, I just given the format here for all three different types of house properties, guys. As we already learned all this, but you should know as a format when you're solving the question, where should I target it? Especially if it's self-occupied property, go on directly to only interest. Okay, see, I have divided into two parts. First part you can see gross annual value calculation. Second part is what? The what calculation? Income from house property. If it is a let out property or deemed to be let out property, both will come. Whereas if it is a self-occupied property, straight away go and eat only interest. That too, if the assessee is following default regime, nothing is there. Only optional means you will focus on interest. Clear? There, please be careful with interest part. Okay, maximum restrictions and all. Yes. And one more thing. See, for let out property, everything will come, including actual rent will come. Yes. Whereas for deemed to be let out property, this will not be there. This will not be there. Straight away, your expected rent will become what? GA. Rest all will remain same as between let out property and deemed to be let out property. One important highlight between let out property and deemed to be let out property is this. Actual rent will not come in case of deemed to be let out property, guys. Yes, this is all about second head of income.